Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center right here in Louisville. We're all about hooking you up with free, super secret business coaching and training services. It doesn't matter if you're just dipping your toes in or gearing up for a big expansion. We've got the goods, the tools, and the know-how to help you win. To get the scoop, cruise on over to LouisvilleSmallBusiness.com or hit us up at 502-977-5800. Big thanks for tuning in to today's webinar. Feel free to drop your questions or chat it up with our speaker using the chat feature. Let's dive in.
Hello there. Welcome, friends. Welcome to another edition of Toolkit Tuesday. Thanks for joining us today. And so we have a lot going on today. And as always, I'm joined by my great friend, coworker, Janet Flaw. Hey, Janet.
Good day, everybody.
All right. And hopefully you can hear and see us pretty well. And just to make sure, if you wouldn't mind, if you look at the bottom of your screen, you should see a toolbar right down there. If you don't, just take your cursor and hover over the bottom of your screen. It should pop up, and there you'll see the little chat button. You click that, and then just let me know that you can hear and see me okay. Just say hello. Tell me your name, and then where you're joining from so we can see where you're coming from, too. It's always really interesting to see where everybody joins from. And we get people from all over the country sometimes, in the world. We've had a few from all over the place, which has been fun. Fun to see. So hello, who I hope I'm saying that correctly. From Louisville, good to see you. Connie. Hey, Connie. Connie, where in Kentucky are you from? Because Janet and I are here. Well, Janet's not, I'm in Louisville, and Janet's just north of the river in Sellersburg. So Sandy Hook, well, that's great. Yeah, that is great, beautiful country that way. Yeah, Sandy Hook, excellent. So, yeah. Come on, everybody. There, I know there's a couple other folks out there, so just say hello. Yeah. All right. Well, today we have, we've been talking a lot about going forward and getting your business prepared and, increasing the value of your business. Most business owners, the bulk of their wealth going forward is tied up in the business, and that's not so much of a cash or a liquid asset. So, if you would ever to want to liquidate it or cash out, then you would want to do that in the best way possible. And the way to do that is to really put systems and processes in place that increases the value of your business and makes it more attractive to a buyer and invest, an investor. And so we've invited our good friend Sherry Radler, who is a great financial expert and advisor, and to kind of go over a lot of this stuff too. So Sherry, can you join us today?
Hello.
There we are.
How you doing?
Hey, Sherry.
Hi. How's everyone doing?
So thanks for joining us, Sherry. And I'm going to let you just throw it over to you, let you introduce yourself to everyone and tell, a little bit about who you are, what you do, and all about all the valuable things you provide for our community, small businesses.
Well, glad to be here. So thanks very much for inviting us, and we'll start the presentation. But I'm Sherry Radler, and I'll tell you a little more about myself as we get into this. But to tie into what David just said about looking for the future, everything we do in financial planning in our business, really in our mind, a belief really starts with the end in mind. So using that for that future investment, they say almost 80% of a business owner's wealth is tied up in their business. But 75% of the business owners, 70% that go to try to sell, are never able to quite cash out of their business as they need and get to some of those benefits. So this topic really ties into that. But yeah, you're talking my language here. So I'm going to start showing and we'll just kind of go through financial planning.
Yeah, I'll just say one other thing is I've found that like when you prepare your business to sell, let's say you have a 3-year window, just the act of preparing that makes it
Yes.
easier to run. You end up making more money just as an after fact. And you may think, well, maybe I'm not ready to sell anymore. Maybe I don't want to retire or something. So, yeah, it's a great process to go through.
We do it as almost a readiness tool. So, irregardless of what you are wanting for your future, it is developing the strongest business you can because the most well run business, whether you're going to keep it forever as a legacy or sell it, but the most well run business is going to be the most profitable business. And
Yes.
that is the business that's going to benefit you and your family for whatever those goals are. So,
Exactly.
okay, so let's go ahead and get started on this. So, because just to tie into this, imagine this, you have actually built a successful business from the ground up. Your services are in demand, your team's thriving, your customers are happy, but suddenly something happens. And whether it's a challenge, a market, a cash flow crisis, or someone, your competitor opened up across the street. But what has happened is a disruption. And how prepared are you to navigate the disruptions that come into your business? Because the difference between the business that merely thrives and those that really succeed is the ability to plan ahead. So it's about being proactive so you're ready for the challenges and the opportunities that come your way. So today we're going to actually dive into this topic because it really can make and break your financial future. It's not just about a budget, it's actually a roadmap that we're talking, that every decision you're making in your organization is propelling you to that long-term end result and success. So we're going to explore some practical strategies to help us manage it. We're going to talk about, what it takes to be resilient in our industry and just setting our businesses up for success. So let's just go ahead and dive in with my clicker. So as we said, I'm Sherry Radler and I am of our accounting group, and we're going to walk through the essential planning for financial and sustainable growth for your business. And whether you're just starting out, you're already expanded, or you're really looking for your exit and you're starting to look at that, you realize that the financial plan is part of the navigating the world you're in. So at our firm, our premise is focused on numbers driven by results because we don't just look at the past, we are partnering to shape the future. We want to dive into our financials, we want to dive into our operations, and we want to ensure that every strategy and action you're taking in business aligns with what your goals are so that you are achieving those meaningful results in your organization. Because financial planning really is the backbone. It's not just managing for today, it's building the framework for the growth and resilience. That's how we frame it in our firm, working with clients, that we're really building a nice solid foundation in the framework so that everything that happens within your organization has kind of got something to support it and sustain it. We really are working with our clients to help you guys make strategic decisions because to allocate those resources and more importantly, being prepared for the unexpected. So it's looking ahead to where do you want your business to be in 3, 5, 10, 20 years. But as a business owner, you have to understand that the choices you're making now are setting the stages for these future opportunities, which includes an investor or an exit or ownership transition. Because whether you're planning to for that next generation, you want to sell it, or you're just looking to ensure its longevity, understanding your financials and having a plan is essential to it. It's all about being proactive rather than reactive. We need to be ready so that when things unexpected do happen, we know what needs to be done to keep our business on track. Because just like using a GPS, when you head out of town, you use your GPS to plot your best route to your destination. Financial planning is the GPS for your business. It's not just about getting day to day or through the next block. It's making sure you get through your entire journey in the long run to the end in mind. Having a plan really just means you're better equipped to make those smarter decisions. It gives you an idea, a path to follow, and it makes sure your business stays on track. With the accurate financials out of your system, you can then make informed decisions. You can make sure what you're doing is aligning with your business goals. It helps you utilize your resources. It allows you to boost your efficiencies, and ultimately, it will drive your growth. It's about making sure that every dollar in your business is spent wisely to fuel your success. Every dollar can only be spent once, so let's make sure it's spent in the most optimal way for us. And let's not forget about the unexpected. Things happen. Market shifts, sudden expenses, pandemics, things happen. A good financial plan helps you stay resistant so that you can handle what comes your way. So the key components of financial planning is to these four bedrocks. And the idea is to ensure your business is prepared. Budgeting is crucial. This is not about limiting spending, but it's about the strategic allocation of resources, understanding what your goal is for the next year and how you're going to allocate both your team's time and your financial resources really helps you prioritize where you're going to do the next year. Risk management is all about preparing for the unexpected. What could happen? So, laying out the possibilities of what could happen and preparing some mitigation strategies really can help you safeguard your business against these disruptions, whether they're from the market or regulatory or just, a change in just something totally random and unexpected. Forecasting, it gets us thinking proactively. It looks to future trends and performance and what is coming up. What do we need to position or adjust ourselves to so that we're ready when this happens? Is it a new compliance in your industry, a new technology? But it's understanding that it is coming and taking steps today so that you have adjusted yourself to receive and catch that new opportunity or that new change solidly and not being caught unawares when it happens. And lastly, investment strategies. This is all about looking toward the future. This is generating returns and outlining our long-term growth. Strategic investments into areas like R&D, technology, market expansion. All of these are areas to explore to see whether or not they can help you get that competitive edge. It's all about making smart decisions today to try to secure a prosperous future tomorrow. And it starts with setting goals because setting out the goals is like mapping our journey. You wouldn't start the trip without knowing where you were going. So we don't start this journey without having an idea of what we're trying to accomplish. It's about making the actions contribute to that. So we have to know where we are trying to get. Are we trying to grow? Are we trying to transition? Are we trying to sell? Just again, that end in mind. What is our plan for the next 3 to 5 years? And that will help us outline the journey to get there. The roadmap is what we call it. Because having both these short-term and long-term goals ensures that every decision you're making lines where you want to get. And as a business owner, this is often on the personal front. The decisions we're making on our business are helping sustain us for what we're wanting in our personal life. Give you an example, the business that puts your child through a private pre-K isn't going to pay for an Ivy League college. So it's understanding what do we want our business to do and know where we're trying to get to. Because setting these objectives is what allows you to make the decisions and track your progress. It's about aligning the strategies for both your personal, your business, and your overall goals for success and growth. Setting measurable targets and tracking KPIs is also essential. Just like on any journey, if you don't, how many miles to Louisville, if you don't know how far you've come, so you need to roadmap it. Where are you? against your key performance indicators or your targets. This will help you monitor your progress, your performance, and ensure that everything you're doing is number one, your resources are being used effectively, but that everyone is staying on course to those big goals and those big audacious goals that you set out at the beginning of the year. And it allows you to continually course correct so that you do stay aligned with those business goals. So once we have an idea of what is our goals and our objectives of where we want to go to, well, we must now take a look at where are we? So where are we now? Because this is the groundwork for our future planning. So we have to know where our starting point is so that we can plan our path forward effectively. Sorry about that, went backwards. So the solid financial plan starts with knowing where you are. Think of it as taking a snapshot of your business's financial health. It's looking, where is our money coming from? Where is our money going from? How does our money move in our business on a cash flow basis? What do we own? What are our assets that we have of value? And what are our liabilities? What are debts that we are responsible for that we must incorporate? Because understanding your current financial position is the groundwork for the next phase. But it gives us a clear picture of our starting point. So not only do you know where you are, you may have identified some gaps during this progress and realizing by laying this out that you may already have some holes that you need to plug as you look at your organization. So our idea is to identify the strengths that we can build on, the weaknesses that we need to address, and more or less understanding where we are as that second step of deciding how we're going to accomplish this journey of where we're trying to get to. And this is where a budget comes in. And once you know where your business stands financially, the next step is to create a budget. And please note, we say a realistic budget because a budget is actually a powerful tool. It is more than just a list of numbers. It is a tool that can help you manage your cash, avoid overspending, spot opportunities to save. It sets a clear financial picture of what you're trying to do, and it gives you something to measure against to understand whether or not you are staying on target. The true power of a budget is that it aligns your financial resources with your strategic goals. So whatever you're trying to do, you're aiming to expand new markets, stability, but the budget keeps you focused on what really matters. It sets the expectations that allows you to drive your decisions and actually allows you to benchmark against it. Using a marketing budget as an example, marketing, you can have a million spends with marketing. Well, if you have a marketing budget, number one, you see where your money is gone, but you can also see maybe we've already spent this budget and no, we will say no until next time. So the idea is understanding where your money is going, where do you want it to go? But to make your budget truly effective, you have to review it regularly. By comparing your actual performance against your budget, you see where you're hitting the mark and where you need to adjust. This is part of that proactive approach that allows you to respond to changes, tackle challenges, and really just see how what you thought was going to happen and what has actually happened either align or differ as you approach the world and real life is hit your business. So we want to tackle challenges. We want to take new opportunities, but more importantly, we want to keep our businesses resilient and focused on long-term success. Cash flow. Cash is king. Cash flow is truly the lifeblood of your business. Effective cash management ensures that your business can meet its obligations and take advantages of opportunities. It's not just having money in the bank, it's about maintaining stability and supporting growth. Monitoring cash in and cash out allows you to prevent cash shortages. You can plan for the leaner periods and you can make sure everything is covered and running smoothly. Managing cash gives you flexibility to adapt to changing circumstances. And means keeping your business healthy and running and ready for whatever comes next. Maintaining liquidity is crucial, of course, because a business that has cash on hand can not only meet its short-term obligations and operational needs, but it allows you the liquidity to also support your business operations, and having additional funds provides that cushion. For unexpected financial challenges, we want to avoid disruptions. We want to maintain the financial stability of our organization. There's nothing more stressful as a business owner than to look at a cash flow shortage and wonder what happens next. So really trying to ensure that the funds are staying ahead is where we're trying to go. Ensuring operational efficiencies are important for cash flow management because it reduces costs and it optimizes resources, leading to the improved financial controls. We want to minimize waste. We want to streamline our processes, and we want to do everything that's available to lower expenses and increase profitability. So it's this efficiency that helps maintain the positive cash flow that businesses need. And the truth is, no matter how great your product is or how loyal your customers are, sooner or later, your business can still face a cash challenge. So let's go over a couple strategies to keep your cash flow solid. The first thing is forecasting your cash flow. Understanding what is coming up in the future, understanding your upcoming expenses, it allows you to spot shortfalls before they arrive. And understanding your burn rate is critical. The burn rate is the dollar at which your company spends money. Knowing the monthly number that is needed to cover your business expenses and keep operations moving smoothly is one of the most critical numbers, in our opinion, that a business owner needs. Because this insight allows you to avoid running out of cash. You can immediately look at the bank, you can look at your balance sheet, you can see what's going on. And it's like, if our run rate is X and we have this much in the bank, just a fast math, you can see how things are going. Again, our idea is that we want to identify shortfalls before they become issues. Monitoring cash inflows and outflows. That's really just monitoring your payables and receivables. Encourage our customers to pay promptly. Negotiate favorable terms with suppliers. Balance it in. We want our customers to pay us as quickly as we can get them, and we want to adhere to as many terms as we can on a net 30, net 45, because unless there's a discount and a benefit for us as a business owner, there's no real benefit for paying our bills early, and often we're losing out of interest or just the use of that free cash flow. Cash flow reserves. It really, having a contingency fund or a cash reserve as a safety net really helps you handle those unexpected challenges, or, seize new opportunities as they come around. If you've been in operations greater than a year, we recommend you speak with your banker about establishing a line of credit. Doesn't matter how big. 5,000, 10,000, but it's a great opportunity to have a little backstop and a cash shortfall. You can pull it out, always pay it back, but having that as a little backstop is quite helpful as a contingency net. So by implementing these, understanding your burn rate, these are all aspects of cash flow management that help support your business moving into the growth of your organization. Investment. Because once we have our money and once we're running our business and once we have contingency fund, our profitable company should have additional funds in our operations that are now available for investment. And this is like planting seeds for your future growth. The strategies can help you expand, innovate, and remain competitive in what is everywhere a rapidly changing market. So making wise investment decisions today do help shape your company's future, but you have to really be strategic. It's not about jumping on the first opportunity. It's about choosing the investments that align with your long-term goals. Understanding your market, spotting trends, finding areas that your business can grow either horizontally or vertically into your industry. But whatever they are, your investment should support the overall strategy and drive you to that sustained success and that end goal that we've been talking about. Because growth doesn't happen by accident. So to keep your business moving forward, you have to start by understanding your market and understanding the trends that are impacting your industry. This might even mean analyzing customer behavior, competitors, and staying abreast of industry publications and changes of technology and regulations that can be impacting you. Look for areas that you can grow and improve in, and then align these with the opportunities with your business's long-term goals. Evaluate how each opportunity fits into your strategy, contributes to your overall objectives. By staying focused on the right opportunities with your right goals, you're going to find that nexus that will help you bring in the right investment to keep your business thriving and the next step of your business journey. And then how do you evaluate these investment decisions? Because there's a lot of opportunities out there. Do you want to put your money into a lot of buckets? But you can only put every dollar into one specific bucket to utilize. So to evaluate investment decisions, we really recommend two parts. One is let's conduct a risk assessment. Let's identify the potential risks. What are the markets, the economic, what are the specific business risks to us, whether we did this or if we opted to not do this? So don't just look at it as a yes. If you said no to this opportunity and your competitor down the street said yes, how would that impact you? So we want to use analysis like that to justify whether or not the potential returns justify the outlay and the risks. And to evaluate some of that is the return on investment ROI formula. And it's really designed to calculate what is the return we expect to get on this investment as compared to our outlays for the investment cost. So to assess whether it exceeds or meets your goals or benchmarks is what you're just trying to do. So is this a financially viable investment? Does it align with our goals? Does it align with our current outcomes? Does it help leverage us further into our journey? These are all questions to ask when you're evaluating investment opportunities. Risk management. Outside of investment, there is risk in every business, and taking risk is necessary for any business to grow. But unmanaged risk can lead to setbacks. So a well-managed risk management strategy really helps you navigate the uncertainties and protects your business from potential threats. Because every business faces risk, but it's how you handle them that can significantly impact our opportunities. It's because risk management isn't just avoiding pitfalls, it's about making us more resilient. Life happens, things happen. So it's about being prepared. It's identifying, and it is one of those items that as an evaluation is something that an investor or a purchaser is very interested in, how you understand your market risks. Because understanding our risks is critical for the long-term success, and risks come in many forms. Market fluctuations, regulatory, technology, even internal issues like process disruptions or key personnel leaving. So each of these can impact your operations, profitability, and your overall stability. So let's run through a couple of these types of risks. Organizational risks stem from internal failures. So something has gone wrong within our organization, and so we want to develop strong internal controls, manage risk assessments, and we're looking for vulnerabilities because we want to try to take action before they can escalate to anything. Financial risks come into play because they involve liquidity issues, credit challenges, investments. So this is where effective cash flow management and careful evaluation of investment opportunities really benefit the organization to avoid these kind of pitfalls that may come in this area. Market risks are external. We have no control of what the market is going in. It is unpredictable in nature. The economy, consumer demand. So it is all about us staying abreast of what is going on in our industry, having contingency plans, having fallback scenarios. Don't live in this land, but understanding what if scenarios. If this were to happen, what would we do? It's a great lunch and learn conversation to throw some items out and just have a little bit of a mindset. Regulatory risks come from compliance. These are changes in laws and regulations. Again, nothing we can control, but we are significantly impacted by them as they come through. So being up to date on these compliance and the proactive approach is very critical. So by understanding all of the internal and external types of risks and implementing a risk management plan, you're not just protecting your business from potential threats, you're positioning it to thrive in the face of adversity. It's about being proactive, prepared, and resilient. And that's how you ensure that your business is ready to handle whatever comes its way. How do you develop a risk management plan? Well, it's all about being prepared and proactive. So mitigation strategies help reduce the chance of the risk occurring or lessens their impact. These can be things like diversification, financial controls, regular audits. Contingency planning, on the other hand, prepares our business for the unexpected. The what if. It's an economic downturn. Our supply chain is disrupted. There's a natural disaster and we cannot get to our computers. So having that emergency response plan really ensures that you can adapt quickly and get your organization back online as quickly as possible. Scenario planning is the what if world. It allows you to explore different potential situations and develop strategies to happen. Once upon a time, I worked at a chemical organization and we did this. If there was a chemical spill, who did you call? What did you do? Who talked to the press? Those type of things. But we laid out scenarios of what could happen in our organization. And we assigned whose role was to do what in that, down to who was supposed to pick up the phone and call 911. Whose role is it to do this step? So by having these risk management plans, you're looking to protect your business against the future and potential challenges that it will inevitably face. Okay, financial controls and monitoring. So now that we've done all this, we really want to implement strong financial controls to ensure accuracy, prevent fraud, and support the strategic planning and partnerships that we have. Regular monitoring just ensures that we're staying on track with our goals, our budget, and our plans for the next couple of years. So financial oversight includes monitoring financial activities, maintaining accurate records, ensuring compliance. Preventative controls are designed to avoid errors before they occur. Detective controls are designed to identify the errors once they've occurred. And corrective controls are designed to correct those errors once they've been found. Used to be someone would ask me what I did for a living, and I used to say I was a professional scavenger hunter because my job was to go into your books and I'm looking for the problem. I'm looking for the problem or the mistake that you made, but you can't tell us what you did, when you did it, or what it was you did. But if we would just go in and find it and make sure your books were all right, everything was great. So very much so preventive looks to avoid, let's find it, let's fix it. Directive controls actually they're the areas that help us provide the guidance and direction to ensure compliance with our policies. This will be our manuals, our SOPs, checklist, workflows. So directive controls are how we are directing our team to do things. And compensating controls are alternatives that are put in place when the primary control cannot fail. We call them workarounds. It means whatever the system was designed to do doesn't quite work. So we have come up with a way around that to get to the result we are needing it to get to. So by implementing a combination of these controls, you as a business can create a robust management system that is looking to safeguard our assets, ensure the accuracy, and make sure that the information we are using to build our decisions on is correct and accurate. And if we have all this work, what do we do with it? Well, we must monitor it and adjust it. So we're going to monitor it regularly. We want to, stay on track with our goals. The assessments let us see where we are standing. We want to review our objectives and our financials and get a clear picture of where we are at. So understanding where we are at allows us to be very responsive and course correct and make changes. Timely adjustments allow us to quickly make these changes. If you're noticing a trend that impacts your business, adapting early can, really prevent a minor issue from becoming a major issue. It also allows you to optimize the utilization of your resources, understanding what's going on. You can redirect product to a different line or resources to a different area to support that group. Goal tracking is understanding that our strategies align with our objectives. And by continually evaluating our progress, we can make decisions on how close we are to our goal achievement. How are we holding up on getting to where we are trying to go on our journey of our GPS that we were talking about? And technology is a game changer for businesses. It enhances value, it enhances efficiency, it does all, makes life easier all around. Leveraging improved technology allows us to streamline operations. Often it reduces our costs and largely improves accuracy, all of which are critical for scaling your business. So incorporating efficient technology-driven processes into your business really makes it more agile and competitive, and you're able to adapt to changes as a faster than someone that has not leveraged technology. The more you can integrate and demonstrate streamlined processes, the stronger and more resilient and attractive that your business will become. So automating routine tasks like data entry and reporting, it allows you to bring your team out of that mundane and leverage them into more strategic activities. With advanced software, you can analyze real-time data, track key metrics, make informed decisions. A lot of this information is maintained in the clouds, so that allows your team to access data from anywhere and really work collaboratively, no matter where they may be located. And of course, technology both strengthens and puts at risk your financial information. So as a business owner, you must be aware that while technology is a huge boon and benefit to us, we, as the keeper of this private and privileged information, also come with the responsibility of protecting it from bad actors, cyber, things like that. So it is a double-edged sword, but technology is 100% provides you the ability to improve efficiency, gain insights, and support your long-term growth. So we're going to talk a little bit about this. So Netflix's story is a prime example of how adapting to changing market forces succeeded. Because they started as a DVD rental company in 1997 as a direct competitor of Blockbuster. And over the 20-some years that Netflix has been around, they have transformed into a global streaming leader with over 200 million subscribers. They are now producing their own content using personalized recommendations and content creation. They created hits like Stranger Things. By moving to the cloud computing and changing to market wants, they scaled to video streaming, and they continue to outpace Hulu and Amazon Prime on their deliverables. Now contrast that to Blockbuster. Blockbuster dominated the video rental market at that time, but they failed to adapt to the digital shift and they ultimately closed their doors. It was Netflix's really, they were tech savvy, they were nimble, they paid attention to what was coming down the pike that also positioned them, it allowed them to position themselves as a market leader because the days of delivering those DVDs to your mail are long gone, and Netflix adapted to the times as they changed. Stakeholder communication and transparency. Transparent communication is key to building trust with your stakeholders. Providing clarity, demonstrating integrity, you're not only enhancing your credibility, your organization's credibility, but you're also giving them the information to facilitate informed decision-making to your board and group. So when you openly share financial information, it really helps everyone understand the company's performance, challenges, goals. This clarity can foster a sense of confidence and alignment across your entire group, ensuring that everyone is on the same page. Clear communication about financial health really improves decision making. When your employees understand the financial goals and constraints, they can often make better choices that align with the company's objectives. But if they don't know what your goal is, they are not making choices to align with it. For your investors, transparency will build confidence, demonstrate accountability, and often will lead into increased investment and stakeholder support. Transparent financials drives employee morale. When they feel informed and valued, they're more likely to be engaged and motivated into your organization. It creates a culture of openness. Questions and feedbacks are encouraged, leading to the collaborative and innovative environment that we are needing for our group. And here are some best practices to ensure that the financial information that you are putting out is reliable and affordable. First of all, let's be consistent. Whatever process you are using, the accounting method, the reporting formats, let's be consistent. It is very easy to compare financial data over periods and times to identify trends and issues if everything is putting out in the same format each time. Accuracy. Review those financials, find discrepancies. If you have questions, dig in, but ensure everything on those financials is correct before you give them to an outside party. Timeliness, let's put them out timely. Information 90 days after the end of the month, that is great. That is fodder for the fireplace. But having information within 15 days of month end or ongoing real-time dashboards really gives you that agility that you need to make decisions. So timeliness is important. Clarity, just making sure that you are providing information. You are not using confusing or overly technical language to your investors or to your stakeholders. And more or less just following these best practices, you're making sure that your information is not only accurate and timely, but it is meaningful and it is actionable. And it allows those that receive it to take action using it and that they can trust it. And we're coming to the end. And as we end, let's reflect on this statement. The goal of financial planning is not to predict the future, but it is to make the future predictable. So what does that mean for us? It's about creating a strategy that allows us to confidently navigate whatever lies ahead. Because by planning effectively, we're not trying to see every twist and turn that life can do, but we're setting up that framework that prepares us for the unexpected. It gives us the ability to adapt and thrive no matter what comes our way. Financial planning helps us by giving us the tools to handle uncertainty, to make informed decisions, to stay on course for both our business and our personal goals. It's about transforming uncertainty into opportunity and making sure that the future that we are envisioning isn't just a possibility, but we are taking tangible steps to make it a reality. And with that, thanks for joining today. And remember, with the right financial plan, you can shape the future that's not just promising, but predictable. Hope you found this valuable. And if you have any questions, don't hesitate to reach out.
Yeah. Thank you,
Oh,
Sherry.
yes. Take
Yes.
the QR code right there, and there is a handout on risk management and budget development.
Okay, great. Yeah, let's just leave that slide up there for a bit, Sherry, so people can take advantage of that. If you have any questions for Sherry, just put them in the chat and we will discuss them and get them answered for Sherry. But this was really spot on. I really appreciate the information, Sherry. I really do.
Very well.
I was kind of intrigued about the investment strategies you were talking about. I always kind of think about in a business, assets or your business assets are the things that make you money. And there's always a question like, should I invest in this real estate or invest in this piece of equipment? And most people tend to make decisions on a gut basis, but you can help make a more informed decision on something like that, right?
Yes, because it really is, should we invest in this real estate? Well, what would we do with it? How does it benefit us? If we're buying the building our office is in, and instead of paying someone else rent, we're paying it ourselves, that might be a more, easier decision than, well, I'm going to buy this building and it's in my hometown and I have no real reason to buy it except for someone offered it to me and I have the money in the bank and we could probably store some stuff there. Is like, well,
Mhm.
not that I've ever had that conversation before, as you can tell.
Yeah. Yeah. I think that's a hard calculation for some folks to make. So it's always good to consult an expert, when you're making big decisions like that in your business. And
We talk to our clients and conversations start talking about what to do once you're making money. We kind of break it down and it's like, well, first of all, we have to develop profit. We have to get you to making money. And I think we've talked about this before, David, but you have to have profit development.
yeah.
Then you have to have profit implementation. Okay, how are we using this money in our business? But profit, that advancement is okay, well, then how do we leverage it into our homes, our personals? Are we investing in the properties? Are we taking it home and business is great and now we finally have the RV or beach home kind of thing? Those type of things.
Yeah, that is a process.
As a personal home business owner or the person that owns a business, understanding how much of your personal wealth is tied up into your business is just really critical. Because at the end of the day, we think we're building something that it's like, okay, this is going to be, and we're in this great transition right now. And it's like, I'm personally hoping it's not just all written on Monopoly money, that all these businesses really do transition successfully over the next 10 years.
Yeah, and that's a great little segue into your whole section about risk management, because that is the key to success. Just having everything in place, so if something happens, you can deal with it easy and quickly and not have it disrupt your business, and take your eye off the.
And so much of this is not even financial related. I mean, there's 5 Ds in business. I mean, death, divorce, distress, disability. I mean, your business can be operating just fine and an outside something comes in and impacts it. So when it comes to risk management, it's more than financial. Buy sell agreements, key personnel. Do we have life insurance on partners? Something else happens and all of a sudden this external factor has just landed like a 2,000 block in the middle of your business. And you're like, hey, this business is great to operate, but I don't have the money to buy out my partner's widow. I mean, things like that can destroy a business. And that's part of that risk management side.
Yeah. My risk management story is that one day I was being a jerk and I made the bookkeeper angry and she quit. And then if she left and I realized she's the only one that had the password to QuickBooks.
Yeah. I mean, things do happen.
Yeah,
So put
that's
going
called
on your
a key man risk, you know?
100%.
Yeah,
And we've gone into clients and they can't get into their own QuickBooks for just that reason,
yeah.
you know. If that ever happens to you and they are a CPA or accredited, that is a violation of their oath. So just as an FYI, it's one of the benefits about using a credentialed person. But yeah,
I don't know. I deserved it, Jerry, so I'll just say
yeah. But
that.
no,
Yeah. So
very good.
I forget who said this, but gosh, what is his name? But anyway, he says you want to be like Switzerland, you know, you're neutral. Like if something happens, like, it's okay. It's no big deal, you know?
Mhm, pretty much.
Yeah.
Lines of credits, just a little bit of fallbacks, a little bit of what if, looking around and realizing, wow, Sue in that corner is the only person that knows how to put together this complicated bill for our customers. Things happen every day to people. And
Mhm.
it's like if only one person knows how to do something in your world, I would take a hard look at that and make sure someone was
Yeah.
frustrated. Or at least they videotaped it on a Loom video of how they
Right.
do it. But yeah.
Yeah. So, okay. Well, it doesn't look like we have any questions today. So, Sherry, thanks for joining us. You're such a great speaker. It's always a joy just to listen to you talk.
Thank you.
Yeah.
Dave, did you see the couple questions there in the Q&A?
Oh, no, I didn't. Oh, there they are. Yeah, my bad. Sorry about that, folks. Yeah, is there an all-in-one single tool that incorporates budgeting tools, forecasting tools, and monitoring tools? That's a fantastic question. Thanks, Connie.
That is a great question.
Yeah.
So we use a kind of a compilation. So we are a QuickBooks Online centric firm. So not every firm is, but we predominantly work in QuickBooks Online. QuickBooks Online allows us to have both the actual as well as the budgeting section of it. We will work with it generally on a Swift Analytics as our bolt-on when we want to go into cash flow forecasting or things like that. QuickBooks has an embedded, pretty solid cash flow tool within the portal. We just tend to go a little further, like 13-week planning, than some of what QuickBooks allows. But those are a couple good ones, but there's various. Every software I just listed has 3 competitors that are just as solid, just as good.
Mhm. Yeah. I think the little apps and stuff and the tools are fun and easy, but sometimes you learn more if you just try to set something up in Excel and do the hard work and then become an expert.
We build budgets in Excel to this day. So QuickBooks, we put the budget in when we're building a budget. To this day, we're going to build it with clients on Excel. It's every account, every month. You have all the tabs for your supporting budgets. How did you get to the sales number, the personnel number, the marketing number are all different tabs that feed over. Once we have the budget, we'll load it into QuickBooks for period over period monitoring.
Mhm.
But there's nothing that beats Excel for just building a budget.
Yeah.
To this day, nothing beats Excel for building it, at least in our opinion.
So Connie also asked if you do any training on QuickBooks.
We do. QuickBooks Online, but we do.
All right.
I'm actually a certified QuickBooks trainer.
There you go.
So
There's Sherry's contact info right there, Connie. Take a picture of this screen. So, Connie, thanks for those questions. Those were fantastic, actually. Those are great. Okay. I think that's about it. So, Sherry, thanks for joining us again. And again, it's really, really great to hear you speak. I really always learn a lot. So,
this is great. Thanks for having. We have fun.
Yeah, we do. So. All right, Sherry, thank you. And then, yeah, we will also send out the recording and the slides for you guys to look at again and go through all this stuff. But, the slides are a great outline to follow and get your contingency plan in place. That's probably the most important takeaway I could point at today.
this QR code will take you to the risk management and the budget development handout. So those 2 slides are right there for you.
Yep.
Okay.
Okay. Janet, thanks for joining and driving the ship for us as always. And
Look forward to next time.
Yeah, thank you.
we guys will see you on another Toolkit Tuesday. So happy Tuesday, and we'll see you soon. Bye-bye, everybody.
Bye, guys.